I'm Sam Rose, and this is Commerce is Chaos, the podcast for consumer brand founders who know that building a business is messier than the highlight reel shows. Your supplier just missed their deadline, your top product is out of stock, and your competitors somehow just launched the same thing at half the price. Sound familiar? Every week, we dive into the real problems that keep founders up at night, from inventory disasters to supply chain nightmares, because surviving the chaos is what separates brands that fail from brands that scale. Thank you for joining me. Anna, you are a partner at Coefficient Capital, and you lead so many cool and so very well-known growth investments in digitally powered consumer brands. And I love that angle. Just to name a couple, Magic Spoon, Oatly, I could probably go on. You will go on. You'll tell us more. But really, I think that the through line here is these transformational consumer shifts. And the world of commerce has changed so substantially in the past 15 years. And we now have brands that we're calling them digitally native because the internet's like a thing. And I can't wait to hear more about you and your strategy and how you're kind of finding these incredible diamonds in the rough in what is such a noisy space right now.
Yeah. Well, thank you so much for having me. Very excited to be here and big fan of your work as well. So yeah, as you mentioned, Coefficient Capital investing in transformational consumer shifts across the growth spectrum. So we can invest anywhere kind of from Series A through pre-exit, pre-IPO. Our brands typically, our barbell for Series A is $5 to $10 million checks. Our kind of late stage fund can flex anywhere up from there. And yeah, as you said, we're looking for kind of like one of one brand. So where there's really some distinctive kind of technology or IP inherent to the brand, or there's some sort of kind of media outlier, organic customer acquisition flywheel that we can leverage. And oftentimes those two things just are part and parcel of just great brands that have duration and longevity because they have something that is structurally so unique and one of one that strategics in theory who are going to acquire them down the line cannot reverse engineer those two components. So very happy to be here and happy to talk about all of the chaos that is the growth stage consumer markets and in commerce today.
Really, it's not chilling out, is it?
No.
It's just getting better. I think one of the things that you just mentioned reminds me of a thesis that one of our investors at Endless Commerce has, which is around how fundamentally marketing can create or basically extinguish a product advantage that a business has. And of course, she was applying it to SaaS, and you're applying it to digitally native consumer brands and probably some commerce enablement SaaS too. But marketing is a big part of the product. And in some cases, it is the product.
Yeah, I think they go hand in hand, as you said. So like you can't have great marketing and great message if your product doesn't work, and everybody will try it once and not come back to it if the product doesn't actually stick. So there's only so much like top of funnel customer acquisition that a brand can do, but the product really has to speak for itself. But yeah, I think one kind of KPI that we measure for is organic customer acquisition outpacing paid customer acquisition. That's been true like as long as I've been a consumer investor, and it's just kind of taken on different tropes where sometimes that exists digitally, sometimes you can quantify it in the real world and at retail. But I think just word of mouth and basically it's like very, to take it down to the most base fundamental layer is like, do you want to tell everybody you know about this thing that you discovered because the product works, because it's so cool and you want to be associated with it? For whatever reason, like, are you spreading the word so that the brand doesn't have to do it itself? And the brand's then kind of big responsibility is just to get product into your hand and provide the great service that you've been talking about. But there's other kind of hacks around, and I think you've seen like a big uptick in talent-led consumer brands because there is that CAC hack to having a celebrity or a talent leverage their audience to tell everybody and tell the world about it. But at the end of the day, again, product has to be great. People have to want to talk about it. I love just the kind of tribal nature of when you found, your face wash or your pet food, and you have to just tell. There's brands that have done this really well from like even just a micro marketing level. Where I'm thinking of this brand called Baby Ganix way back when that made diapers and everybody was selling on Instagram ads or wherever, and they were doing shower show up. So they were actually gifting moms at baby showers product. And then that created this like network effect of, the 10 moms at the shower now were introduced to this product. They had something to talk about and they have this positive association with the brand. So the more that you can kind of create creative marketing tactics to make the organic piece take off more so than the paid piece, we definitely look for that in our brands.
And like, so to linger on that example for a second, how do they find the showers? Like, how are they market making for?
Great question. This is where the creativity comes in. They just would embed in Facebook mom groups. Like this was way, way back
Ooh,
before many of these. I mean, those communities still largely exist, but they were just getting into these Facebook mom groups, which were such powerful information
yeah,
networks and like trusted authority. So the brand itself, today we put so much of like a reliance on the brand itself being the trusted authority. But can you also just put yourself into some of these communities where people are going to take that message and really spread it for you? But they were getting into these Facebook communities, figuring out where these showers were happening, lining up
right.
logistics one by one with each of the moms that were going to these showers. And like that, I mean, it's a lot of legwork and it's more difficult than it is to just serve up an Instagram ad and hope that you can target a kind of optimized ROI on ad spend. That they were doing the legwork and it worked over
Yeah.
time. It kind of built this just really sturdy foundational brand.
I think one of the other things that makes tactics like that, and maybe you could almost label it like a guerrilla tactic, is that there's not an industry around enabling that, say. I mean, there's big agencies that'll do it for really, really big businesses. Like Pepsi's got a guerrilla marketing team. But
Right.
for like a small-ish startup that's like trying to hit their inflection point, like they've just got to do it. From my perspective, it's like they've got to have the idea and they have to be able to execute it. They can't just call an Instagram ad agency and be like, well, this is what I want my ROAS to be.
Right. And that's kind of where creativity has this more kind of spread out outcome. But I always think about like expanding the surface area of your serendipity, which is to say, try
Uh,
a million different kind of low cost but high touch things, see which one has the biggest leverageable effect and then keep putting energy towards that one thing. And the more you kind of spread out your surface area of opportunity, the more likely it is that you're going to narrow in on a creative message that A helps you understand your product market fit and teaches you something about the emotional resonance that you're having with your audience, but B, it just creates calibration around why you exist, why people love you, and what they're going to talk about going forward. And the more that you can kind of be scrappy around that, I think that it's way more powerful than it is to just have a certain ad spend budget and hit your KPIs every month.
well, and there's asymmetry in it because everyone else has an ad budget too. And
Right.
like,
You
you
really
know,
can quantify great creative and great ideas. And when you can have that kind of systemically exist inside your marketing stack in your company, the outcomes are enormous.
are you seeing an inflection point now in how that's existing inside marketing stacks? And I'm going to just invoke AI as like the biggest creative lever, I've ever touched as an entrepreneur. Did I lose you?
Sorry, lost you there for one
I'm
second.
back. You there?
Okay. I think you asked.
You're back.
I'm back.
I was just, I was, yeah, I'll just do, we're rebooting.
Okay.
Are you seeing like an inflection in how those marketing advantages are like existing inside the portfolio, either your portfolio companies or companies that are sort of like pitching to you?
Again, I think it's kind of there are tools that are optimizing how you utilize your marketing spend, meaning great creative now can be done, way more effectively and way more cost effectively through AI tools or through ChatGPT. That said, again, none of it really back solves for a great idea, a great message, or true product market fit. There's no way that you can talk over or oversell something that doesn't have real product market fit and is solving an acute pain point. So there are really interesting tools. For example, I'm thinking of one right now where it used AI to scan the entire universe of content. And you can put in your brand and you can say, show me where energy drink X shows up on the beach and a girl in a blue bathing suit is drinking it and she's with 10 of her friends. And you don't need to have tagged the brand. You can just all of those really organic moments. And then you can look at them on a dashboard and say, we want this one. This one feels most aligned with our brand and our values and aesthetic. And then you can kind of make contact with that person, ask for permission to retarget, ask for permission to recycle the content. And so there are tools to help you really focus your creative and use it more cost effectively and also get organic feedback. But I think at the
Yeah.
same time, it all again comes back to the product and the emotional resonance. If none of that is there, then you're not going to have great organic content to recycle or great materials to work with. So the tools are great and they're always going to continue to be greater, but nothing's going to really solve for product and purpose.
And someone having just sort of like a emphatic position on how to deploy those new tools, like in
Right.
service of the story and their
Right.
customer.
Right. And you can all get that right. And there's a million things that can still go wrong
Still
anyway.
go wrong.
Yeah.
Still don't do it.
I think of everything as a line item on a P&L and like we're just on marketing and like there's a trillion other things that have to go right for all of it to work together. But yeah.
Yeah, there really are. Are there, using that framework of a P&L, are there line items that you look at as an investor where you're like, either you get really like strong signal from them aside from marketing, either in the yes or no direction?
Yeah, in the P&L, yes, and then extrapolating from, like, further just KPIs, I think one thing that we really look at is retention on a digital basis, but then as you apply it to kind of same store sales growth, for example, at retail, or just growth on a velocity basis rather than a distribution basis. So that's showing me that there's like depth and there's loyalty associated with the use of the product, meaning it's a great product, it solved a problem, and people want to keep using it for that purpose over and over. So that's like a core metric. I would say retention and organic customer acquisition are two that are kind of specific and unique that we hone in on. Growth obviously is a function of a lot of things, but real growth kind of normalized for all of the externalities that there's something that you've solved. There's product market fit and it's taking off. That obviously goes pretty far. I think we look for structurally gross margin advantaged businesses where you don't typically see, I think a lot of consumer brands anticipate that as they scale with volume, your gross margins are going to improve materially. I think you need to kind of underwrite a pretty baseline structural gross margin at like the Series A that's going to be more or less what you're looking at 3 or 5 years down the line. So we look for structurally gross margin advantage businesses, lean kind of operating model, as capital efficient as possible. We love to find bootstrapped businesses that have gotten basically have had the ability to almost leapfrog their seed or early capital rounds just because that shows like a lean operating model and ability to do a lot on a little and with little headcount. And then, on top of that, there's a million intangibles that we'll kind of assess for. But we also like to just play in like big TAM markets. So where not only is the company firing on every cylinder, the potential to blow it up to $1 billion business could be great.
This is going to be a surprising question, but like, what's a business that you think would never work? And then what's a business that you're like, please, someone bring me a business like this because I know it's going to work, but no one's done it yet.
Yeah, I think what we saw and everyone kind of learned their lesson in the last 3 or 4 years. Plant-based businesses, in theory, great idea. Commodity pricing parity was not there, meaning you'd have to like really be virtue driven to go, or for whatever reason, you had to justify a 3x expense at the grocery store to buy a plant-based version of something that you could get on a commodity basis. That kind of structural, business model dynamic wasn't there for that industry. I think you saw just this inability to like a rush to get product to market justifiably from these companies, but like where taste wasn't at parity either. Like you were sacrificing something in order to have this. And so I think I won't name any like specific company, but I think everybody got a little bit over their skis on that market and for good reason. It should exist. I think there's health benefits associated with eating a plant-based diet. There's a million reasons why it's more sustainable and we just need to get the market there. But that was an area where a lot of investor capital and a lot of kind of artificial demand existed, if you will, and the consumer just wasn't there. So I think making sure that you're playing in a market where the consumer appetite and demand is real and exists and you can underwrite that is huge. And then the second question was what needs to exist that doesn't?
Yeah, but wait, let's save that for a second because you just said so many great things. So let's stick here for a minute.
Yeah.
Because you're pointing out something that I think, and I've heard you talk about this before, in like in your consumer trends report,
Yeah.
where like trends are contradicting each other, right? Like there's this trend towards sustainability or like plant-based preferences. And then there's like an anti-trend to that. And it's hard to figure out. There's like so much noise from both of the trends that it's hard to figure out like which one's going to be the more powerful wave, say. And like TikTok shop versus sustainability.
Yeah.
within the context of Gen Z purchasing behavior is like a
Yeah.
great example that you pulled out of that.
Yeah, very critical. I think at the end of the day, people talk with their wallets. They say that they anticipate doing a lot of things. I think sustainability has been a huge one where we'd love to underwrite that sustainability is somebody's number one purchasing driver, but oftentimes at the like slightest macroeconomic softening, people don't care about sustainability anymore. They care about efficacy and value. I think there's kind of just this the trend report does really tease out a lot of very interesting micro shifts. And then we ultimately pair all of those insights and all of that data with the P&L data, the hard and fast spend data. So we look at a lot of consumer edge and a lot of just proprietary data that we've pulled together to help triangulate what people are saying and what they're doing. And when we can really bring together what they're saying is what they're doing, then we know that we've got like a macro tailwind. Plus, we've got, a lot of good micro data points to underwrite that it's a real shift. An example of that I'm thinking about is in the pandemic, there was this massive movement towards buying groceries online for good reason. People couldn't go to grocery stores. And then we just longitudinally kept following that data point to say the second that the world opens back up, are people just going to go straight back to grocery stores and forget that buying online was even a thing? And we saw that a large portion of people moved back to a hybrid model or did abandon that behavior, but more people than not who had adopted that behavior over the pandemic kept that behavior or have been like kind of mixing it into their daily habits. So that is a big, macro shift in the way that people buy things. What does it mean for the economics of these businesses? What does it mean for how people are going to start demanding product in different places? And there's a whole lot that like falls out of that data point. But I think when we compare behavior and indication with reality and those two things align, then we're good.
I bet this approach makes you a really good macro investor too. It's like coefficients applying this at like growth stage, right? Or early growth stage. But
Yeah.
I have to imagine that there's some quant out there that wants these same insights, but like,
I mean, on some level, you can really get excited about an early growth business because there's a million new consumer businesses that start every day, and the barrier to entry for consumer tends to be a little bit lower. And I think
yeah.
the more noise and the more data you have on all of these businesses and like new entrants into the market, the more you have to pair it with, okay, what is the reality of where the world is going? Which is why we kind of say transformational shifts. We like
Yeah.
to really invest in things that we know are going to continue behavior and patterns that we're really sure are going to continue into the future. So, for example, better for you eating is people are always going to want to optimize their health. And the more technology, the more innovation and intuition that goes into creating the businesses that will allow us to have access to better for you, then we can keep underwriting that shift. But we really try to be patient and understand what behaviors are sticking versus what aren't. And that you do have to take a very micro and macro lens.
Do you think that the bar for physical and for consumer is going to stay as low as you perceive it to be relative to like entering other?
Yeah. So I should caveat bar being low is there's just everybody is a consumer, right? To some degree, everybody thinks
Everyone's an expert.
everyone is an expert. And people have phenomenal ideas, and a lot of them want to bring these ideas into existence. And then we have to kind of just triangulate between A, what is an obvious great idea? B, what do strategics ultimately want to buy? Because that's where you become great on the investing side, is how you get liquidity from these
How
investments.
you get out?
Exactly. And then you kind of really need to figure out what is so one of one about this business, whether it's the IP or it's the media or the organic customer acquisition, all the things that I talked about earlier. 8 million things have to be true for a business to be the special one of one consumer brand that is going to realize you like a great exit or great outcomes. Yeah, I think the bar is low in the sense that everybody who has some relationship or an emotional connection with a thing could be an entrepreneur and could figure out, what the next great idea is. Can you pair that with all of the right core KPIs and reason for existing that makes it a great investment is another question.
I feel like the answer to that is changing so quickly now with just how easy it is to like if your thesis is aligning the physical world with the digital universe and the digital universe just got like a massive unlock for people who are less technical, let's say not necessarily non-technical,
Yeah.
to build on behalf of their physical goods initiatives or world or ambitions or whatever it is. Are you seeing a shift in like how that pairing happens now?
Love if you're just like talking about AI innovation in general, I think it's wonderful and I think it's like going to massively benefit consumer businesses not only on kind of the marketing level that we came up with, but just helping to optimize where distribution should be or helping to optimize like shipping and logistics. Like it could really just bring down costs, but it's democratic, right? Like everybody's got access to the same set of tools. So in theory, it's more a selection bias on are you working with the right ones or
Yeah.
pairing your data with the right models to interpret and derive intelligence from them. There's juries out on which of these tools are the best for these consumer businesses today. But in general, I think it's just going to be incredible for founders to experiment with. And I think the first wave of it was just creating new content, creating brand imagery that you can serve on social media that didn't cost you an arm and a leg and take a day to film and necessitate a headcount of 100 people. All of that has helped these businesses become leaner, become a little bit more efficient and faster on testing creative. And you're going to see it play out across. I'm particularly excited about like shipping and logistics. My sister works in logistics and
Talk dirty to me.
like very unsexy underbelly of consumer, but it is a mess. Like these warehouses, 3PLs, all of it are and it's really annoyingly taxing to the consumer brands who all they want to do is have in stock and get their product out in front of people. And that can be a big headache. And the ability to kind of resolve those issues and just change the entire production, distribution, and go to market dynamics for consumer brands will be game changing because at the end of the day, they're like physical products. They need to move from A to B to C. And that's I think we take it as an assumption like founders when they start a business are like, well, I can make the product and I can get it on shelf. And you're like, whoa, there's a million
Wha-
ways that that's going to go wrong. And more visibility and the more kind of technical tools that you have at your disposal to make sure that that process is seamless, the less headache that you're going to have as you scale. So I'm excited for
Yeah.
all of the tools that it's going to bring to bear. But I think that at the end of the day, at least today, they're more or less democratic until we figure out a monetization model and everyone gets charged for their AI utilization.
Right. One day. Yeah. Or we'll heat up something. We'll heat up the moon.
Yeah. Come up
We're
with
gonna
one new
liquefy
data
the
center
moon.
on this planet.
This is the part of consumer that I'm obsessively interested in, which is like all
Okay.
of those enablement rails because they have been historically fairly black boxed, like some of that the knowledge around just how a thing gets made. I mean, when I started my brand in 2012, it was like Alibaba wasn't really a thing. I couldn't really figure out how to talk to suppliers, and then you fast forward 15 years, and you're like, like
Yeah.
it's so much easier now. The unboxing of these things, the unblack boxing.
Yeah.
Flexport did exactly the same, and I admire them so much. Like they did exactly the same thing with
Yep.
freight forwarding, which is just like this weird nest of phone calls from a friend to a friend of a friend until I
Right.
found someone that I felt like I could communicate with and trust. Right. And then it's like, yeah,
It's so I think the halo or the shine of starting, what you want to start comes off pretty instantly when you're met with the reality of like, how is this thing going to get into people's hands? And to your point, it's a black box. And I think it's just, I'm in admiration of founders all the time because there's so many constituent parts to making a product experience seamless for a consumer. And we talk about marketing and we talk about like branding and all of that is great, but it doesn't matter if it doesn't get to people. So again, to the point of bringing more transparency into all of the systems at work, there's plenty more work to do. AI is not going to solve that, but I'm excited for the tools that are going to bring about a little bit more seamlessness.
yeah, you can't really like vibe code a supply chain, which is something I tell myself at night to feel better. I mean, I'm building SaaS in the era of like totally democratic SaaS, and I'm like, wait,
Yeah.
you cannot vibe code the supply chain.
Yeah. Oh my God. And it's the death knell of a trillion brands, unfortunately. I think, yeah, a lot of entrepreneurs have their own nicknames for the various distributor entities that exist to get their product. And not all of
Yeah.
the acronyms are that flattering.
That sounds like it sounds like a new business we should start.
I actually have a spreadsheet. I'll send it to you.
Amazing. Even better. We've already started. You're the
Yes.
CEO. I'm here to
Yes.
support you. Anything that you need.
I don't know if you're going to trust me with that, but sure. I'll delegate. I'll delegate.
Yeah, that's perfect. It's like an interesting recent example of a brand that really like punched its way out of what you felt was sort of like an operational impossibility or a corner?
Ooh, I think, let's think, punched its way out of an operational. Well, I think a lot of brands, when they hit kind of the, call it million to $10 million inflection point, all of their systems and all of the, cooking in the kitchen that you were doing and the nice co-packer down the street that took a chance on you because you had a friend and their kid went to school with you. Like all of that, all of the kind of like putting it together, finding product market fit, testing out and seeing what message resonates, et cetera. All of that goes from 1 to 10 in the course of a year for a lot of hyper growth brands. And all of the systems and all the wheels fall off the bus. So I won't name names, but I'm thinking of a brand right now that had just an incredible growth curve and got a huge PO from a retailer. And all of a sudden that was kind of like make or break overnight on the brand basis, and they needed to scale up operations really quickly. So instantly, was touring every co-packer facility in the country, figuring out quality standards and QA/QC protocol that was, better than and enhanced, but how to not sacrifice product quality and taste from where it was coming before, and really just kind of creating processes around production and then making sure that out of that co-packer facility the product gets on shelf from there. That was, I think it was a hyper acute, it was a moment in the brand's life that it needed to really just punch out, and it did. That to me is like that 1 to 10 million, because after 10 million, you've got people, you've got delegation, you've got kind of these systems in place, and you've been able to build out your team and maybe raise some capital against that to really kind of back solve for a couple more of the like money losing propositions that you might run into. But when you're kind of lean, bootstrapped, and you're having to make these massive growth hurdles and you want to take those chances and take those risks, but your supply chain and your operations aren't necessarily built for 10 million, they're built for a $1 million brand. How do you kind of not fake it till you make it, but how do you get everyone on board that you're a $10 million brand while you're a $1 million brand? And
and I think you're really right. Yet some of it is fake it till you make it. Like I go back to this lived example all the time of like being, and now my target buyer will know, but like I'm sitting, I was a kid sitting across from the target buyer, and they're like, "Are you EDI compliant?" And I'm like, "Yeah." Like, and then I was like Googling what EDI was after that. I mean, and we got the account, but you have to fake it till you make it. And so much of faking it, I realized in retrospect, was just knowing the vocabulary.
Yeah.
And, as much as you could do to educate yourself, obviously, that there's a limit to which how much faking it will actually work. But I found myself on just the warpath of like acquiring all of the acronyms that I needed to know that people were throwing at me as though, it was just like, oh yeah, well, what's your WMS? Do you use an ERP? I'm like, what the fuck is that?
I went on this one for my friend recently, this podcast that she started, and it was like, the concept is break it down as if we're at a dinner party of people that have never heard about your industry before. I realize the way that I speak a different language when I'm talking about velocities and same store sales growth and ACV and all of this.
You're really good at that, by the way.
Well, no, when I tell you how hard it was to actually break it down to like its component parts again and describe it as if I'm talking to children, I'm like, there is a learning curve to the whole industry that I think it makes, like, if you're a consumer specialist, and we think of ourselves as definitely consumer specialists, if this is what you eat, sleep, and breathe, then great. But there's a lot of also interesting capital that's come into our world where it's more tech investors that are coming into consumer because there is a tech angle to the brands now, which is warranted. But the learning curve, and just again, why I have empathy for founders is you're kind of building the plane while it's in the air, and some people can pull it off, and sometimes you have to fudge some things and just tell the target buyer that you're EDI compliant, figure out what that is, and keep moving.
You know what? And a couple weeks later, we were.
Yeah, there you go. Probably we're none the wiser, and everything worked. Here we are.
We had to make every single GS1 128 label by hand. And like my husband, co-founder now, Brian, he was just like in Excel. He's an Excel whiz. So he's like, I think I could do this in Excel. And then later we were like, oh, you could have just printed it from if you'd had $5,000 to roll out this other system in time, you could have just printed it.
There's one of my favorite brands that makes hummus, and I was checking out of Whole Foods, and their UPC codes had been fudged from, and again, this is why it's so tricky because it's physical product. But I was trying to describe to somebody that the UPC, and then I was like, "What is UPC? What is it?" But I felt so bad because I for 3 weeks, I tried to check out of my Whole Foods with this hummus, and it just wasn't scanning, and I was like, "These poor
Oh,
guys are
no.
probably
It's like
just sweating it out." They need
chargebacks and
shelf, the chargebacks, exactly, and Whole Foods should have been pulling it, nobody was doing that, and the whole thing, I felt for them, but yeah, the learning curve, I don't remember where we were going with this, but the learning curve is steep and it is
vocabulary.
vocabulary, but it's a miracle to build, a valuable brand and consumer. Everything that has to be right is a lot for one founder or one business to bear.
It is, I mean, thousands of data points that have to be right about every individual product, given order, a trading relationship. How, yeah, how people do it on spreadsheets is, I mean, we did it on spreadsheets. It mystifies me
My
that we
favorite,
survived.
Carol Hamilton, who ran M&A at L'Oreal forever, said the best thing that I'd ever heard, which is like everybody in the room still has to be in a great mood on the day that the strategic decides to buy the business. You know what I mean?
Right.
Like all of the things that you've gotten right over time, you've scaled, you've made it to the table, and they're debating at IC whether or not strategic is going to buy you, and somebody's mood is off and they decide, veto the deal.
Right.
Like everybody, like not only all the data points, but everybody's mood has to be right. And it's really tricky to pull off, a growth business that exits successfully in consumer. But when it does happen, it's special.
So what we need is like a digitally native mood enhancement beverage focused on marketed specifically to the investing community.
Yeah, yeah. 4 IC committees of large corporate M&A.
It's like Magic Mind, but make it private equity.
Beautiful. I mean, it wouldn't rip. It would be exactly like 10 days a year where that product would sell
Yeah.
extremely,
If it's
uh,
Diet Coke flavored, it'll go.
it'll go.
Yeah.
Anything Diet Coke, it'll go.
It can't
Uh,
be green.
it's an interesting idea. I love the ideas people come up with. This is another example of like on the spot. Not bad.
Actually, that brings me back to the question that I wanted to ask you earlier before I paused myself, which is an idea that you are desperate for someone else to want to do. Maybe it's one of your ideas.
Ooh, well, you know what's funny? The other day I was thinking Ozempic for dogs, and then the first person I told it to was like, "People love their dogs chunky. Why would
Fair.
you do this?" I think a cool
Oh, I
business,
like that one though.
a cool business that it's jury's out on whether or not it's a good idea, but it was an idea that I had. Another thing that I've been thinking is going to take off for a while is like like better grooming products for dogs, like almost beauty industry meets dogs. But again, I think there are businesses building that. Jury's out on whether or not. I don't think the reason I'm on this side of the table is because I don't have the best ideas. There's a cool company. Our latest trend report found that a lot of people would actually give up like a significant quantity of time on their own life to give back to their dogs. So I think
Yeah.
the longevity space for pets is very interesting. I think there are a couple of businesses building really interesting products that will bring kind of that metabolic gut health conversation to the world of pets. And none of them are terribly advanced at this point, at least on the biotech level.
Yeah.
But I think that the way that will evolve over the next couple of years will be exciting to watch.
Okay, I've got one for you. But I didn't prepare this.
Rapid fire, yeah. I mean, none of this, I'm coming in cold to the whole thing.
Okay. What do you think about durable medical equipment, but like make it pretty? Like make it bougie. So, and durable medical equipment for those that are in the acronym, like so like walkers
Okay.
and not necessarily like scooter rounds, but like walkers and like medical chairs for like, like showers at bathing and
Honestly, there's a market for aesthetic for
right. X, but make it pretty. And like, yeah.
now. I can give you the reason why it would be tricky to invest behind that kind of thing, which is that the recurring purchase model does not exist. Well, you could buy one walker, but in theory, that should be the walker that lasts you for a long time. So a lot of
Yeah.
venture investors find durable investing tricky because of the single purchase model. However, like I would buy a very aesthetic walker when I get to that point. I don't want to be
Yeah.
sitting on the street with a
Well,
clump.
and aging population
Yeah.
tailwind. I don't know
There's
if we call that a tailwind.
something there. Is that your next business? Shark Tank.
Absolutely not.
Sure. Incredible clearing ground for all of these things when you watch it.
No, one of the things, I mean, I would start that business maybe. But one of the things that I've been really interested in recently is like revitalizing old business, like seeing if I can take an
Yeah.
older business and like creating a second life for it. And that has a lot to do with, some of the economic climate that we saw post COVID of just like really businesses contracting and not having planned for, I mean, or predicted the next stage appropriately. And so I see a lot of brands that are in trouble. And the bigger ones, I'm like, I wonder if I can like just give this new life and like pour lighter fluid back on it. And
I love it. One of my favorite I'm a sucker for, like, nostalgic, but, like, really culturally resonant brands from the past, and I remember at some point somebody relaunched do you remember that company Baby Fat that made Trek?
hmm
Okay, somebody relaunched Baby Fat. I also saw recently somebody relaunched the soda brand Squirt.
yeah.
I loved this collaboration that this brand called Overtime, which was like high school basketball brand did with And One, or they rebirthed the And One like disc tee, which if you remember in the 90s, everyone was walking around with these tees that had basketball disses. But that is a marketing hack, by the way. That's like
Yeah.
capitalizing on nostalgia that exists in people's brains and not having to then explain what the brand is. Like the way that I walk down the West Side Highway in these and one tees and I get stopped by every
Mhm.
basketball playing dude or even if anybody who was a boy in the 90s will stop and recognize the brand and you can really leverage that IP and I think there's a time and place. I mean it depends on whether it's culturally like accepted or cared about. I think Gen Z and Gen Alpha love these these nostalgic brands, and so there's a moment for that right now, but using it to really kind of just get your message out and get your marketing materials out without having to pay enormous amounts to Facebook and Instagram.
Yeah. I was watching you ever watched the Walter Mitty. Gosh, what's the full title of that
Yeah,
movie?
A Secret Life of Walter.
Secret Life, yeah, Secret Life of Walter Mitty, and it's sort of it's about the end basically of Time magazine, and like
Yeah.
the acquirers come in and they shut it down. They're going to fire everyone, and that got me like I was like, "Where's Time right now?
Yeah.
I want to go buy Time magazine."
I mean, they have their one big moment, and it's the Time Person of the Year, the way Spotify has their
Yeah,
Spotify Wrapped, and these are the marketing, like, essences of these brands. But, yeah, I think there's a
I
million
looked it up. It's Carly Kloss is doing it. I'm like, hell yeah.
He's bought Time Magazine?
Well, I mean,
Wow,
according to the article that I read and mostly recall,
really surprised me.
to
Wow,
be
that's
to be
actually interesting
verified.
because
Yeah.
Taylor Swift being Time Person of the Year and Karlie Kloss. That's okay. I gotta unpack that for myself after.
Trust but verify. I will issue a restatement if I've said anything that's wrong.
That would be super interesting. I'll think of the other great brands that I've seen revived. Somebody was telling me the other day about, like, Blockbuster, wanting to bring Blockbuster back and, like,
Yeah,
breathe some new life into it where it's not a video rental. Like, that model doesn't exist anymore and that behavior doesn't exist, but how do you bring back the brand appeal of Blockbuster and tap into everyone's psychology around it? 'Cause it is joy. Like, it has this amazing brand equity associated with it, and how do you
yeah,
translate that into the 21st century? Interesting.
yeah. I think tapping into, let me phrase it this way: are you seeing nostalgia as a transformation more than a trend, or is that like is nostalgia kind of always green?
Yeah, no,
Because that's not
nostalgia is
fair.
always great. It comes and goes, and I think brands that do it well, like, that's where you hear about it, but there are a lot of brands that try it and can't do it well, but
Yeah.
I think nostalgia will always like, there will always be actually, I correct myself. I was having a really interesting conversation with Caroline on our team recently, and we were like, "What brands will we be nostalgic for in 20 years?" The way that brands are
Mhm,
getting created seemingly so much more rapidly or just
mhm,
differently built than they were 20, 30 years ago, where there was effectively 10 years, 20 years worth of time to build nostalgia into your brand as that brand set into culture. And brands are just being built more quickly and more efficiently today than ever, which is great from one standpoint. But at the same time, it's hard. I'm interested in seeing, let's keep this an open ended question. I think Oatly's a
yeah,
great example of a brand that will have been able to say that they did it well. There will be
mhm,
nostalgia for Oatly in 20, 30 years. And I think if I were building a brand today, one of my key questions to myself would be, can I see this as being a heritage brand that people are gonna have emotional connection to, not just in 10 years, but in 50, 100 years.
Yeah, I think for me as a child of the 90s, like Sunny D and Lunchables really fit that category.
I mean, look at your like giggling, the way that you're laughing, like it has such a feeling for you. It elicits this like, oh my God, I went to school. I didn't look cool until I had Dunkaroos in my lunch bag and my mom wouldn't let me buy the Dunkaroos. She brought the Walmart private label and that wasn't as cool.
Right.
And like socials, like clicks set in at that point. And so there is just so much of our lived experience that occurs through the lens of what brands we associate with. And that's so powerful. And so I guess roundabout way of saying we try to find those brands where the connectivity into the lived experience is so strong. And so that tightness exists of emotional connectivity between you, the owner of the brand, but everybody else who's observing you own the brand. And that's where like really special magic happens.
I feel like I could ask you 150 more questions about this, and I probably will when we have cocktails next week, but this is a perfect place for me to thank you and wrap it up and just ask like, how can our listeners be helpful to you? Who do you want to talk to right now? Who shouldn't call you?
Great question. I think I always want to connect with the best talent in the business, whether you're in ops, you're in marketing, you're in any kind of part of the org chart where we can help our portfolio companies get access to the best talent in the world. That's exciting for me. Anybody that's just building new tools to help make portfolio companies or make our, brand experience simpler, more efficient, and clearer, that's always welcome. And just people who want to talk about culture and consumer. I could like endlessly nerd out on that topic. And obviously with you, I have. So thank you for giving me that platform.
Thank you so much. Really nice to have this conversation, and we'll talk to you again soon.
Cool.
Bye.
Bye.
Thanks for joining us for another episode of Commerce is Chaos. If you're listening, I have a feeling you know just how much good leaving a 5-star review can do for a team. Drop us a review on Apple Podcasts and subscribe to Commerce is Chaos wherever you get your podcasts. Don't forget to subscribe to our Substack, also called Commerce is Chaos, for more good stuff and actionable tools to build your business.